Hello guys, you're welcome to Coinspace with Austin. If you're new to this channel, kindly smash the like and the subscribe button. It does help me a whole lot. And if you haven't subscribed, please do so. So today we're going to be talking about the RSI indicator, the relative strength index. Like I promised in my last video, we're going to be talking about indicator in this our current video. But mind you, in whatever indicator you're using, whatever trading you do, always combine one or two or more indicators. Do not rely just on one indicator alone. It is not actually a wise decision. Now let's go right into the video. Now the RSI indicator, which is the relative strength index, is a momentum indicator. Now it calculates the speed and momentum of the particular asset you're trading and gives you points where you can go in or go out of the market or find a breaking point or a breakout point as you choose, just based on the way you study the market. Now this is how the market works. Now there are always points when the market is oversold and points where the market is overbought, and those are the breakout points you have to always look for. Now the RSI indicator works with the range between 70 and 30. Now, I'll start with this 30. This 30 point is the point where the market is very much oversold. When the market is oversold here, what follows is buying. Investors normally buy when they detect that a market is oversold. And at the 70 point here, the market is actually overbought. And when the market is overbought, selling starts again. Now, that is the two marks you have to take cognizance of when using the RXI indicator. It is pretty easy. It is pretty simple, but very technical, which is why it is basically a major part of technical analysis. Now, sometimes market trends can be very dicey. Now, when a market is actually overbought, does not mean that the market is going to go down all of a sudden, or they're going to sell. No, sometimes there are actually events and occurrences that actually breaks the theory of these indicators, which is the more reason why you have to combine two or more indicators for a trade. Now, there are circumstances where the market was overbought and the market kept buying up to a point, and then it crashed back again. This is where you have to use your experience and look for a breakthrough point where the market is going to crash, and most importantly, combine other indicators and follow market trends, because you just cannot rely on just one particular indicator. For instance, you can combine this RXI and then the Bollinger Band. It's going to give you a good combination. I know most traders who use the Bollinger Band and the RXI indicator, and it gives them a perfect trading experiences. But most importantly, do not forget that there is always a point where the market is highly bought and a point where the market is highly sold. And basically, those are the points you have to look out for, except for in circumstances where the market is overbought and it continues being bought, or a point where the market is oversold and it continues being sold. So these are the points, circumstances that actually defies this indicator. But like I said, combine two or more indicator and get a good result. This is not a financial advice to trade. If you want to do this, also make your own research and actually study it very well before going into the market. If you find this useful, kindly smash the like and the subscribe button. It does help me a whole lot. I am Austin, and don't forget, this is Coinspace.